that it kind of took someone from outside of the industry to figure it out. Because I mean, and again, when you're kicking off so much underwriting profit every year, it's like, why innovate? Just keep the train on the tracks.
Yeah.
I'm retiring in 5 years. I don't need to. I don't take any chances. I mean, that was just part of it. I think is that we kind of solved the problem from the outside, which was really helpful. Hi, I'm Aaron Steffey. I'm the co-founder and co-CEO of Propeller Bonds, and this is the future of insurance.
Aaron Steffey, it's great to sit down with you. And you don't know this. I told you I was going to surprise you when I started things off, but there was a period in my career where I was the global surety expert at McKinsey. But it's mainly because I just read one report from Swiss Re and no one else knew anything about surety. So suddenly that like vaulted me to this esteemed position. But I think that's kind of the setup here is surety is actually really important. And most people, even in this industry, don't really know about it, don't necessarily get what it is, aren't paying attention to it. But actually, like, there's so many things in the economy and the world that need surety to move ahead. So I think it's fascinating. And I think this is a great chance for folks to maybe become the global surety expert in their business by listening into this discussion. So tell us a little bit about you.
Yeah, that's funny. I mean, because I wasn't a surety expert either when I launched this. Now I've slowly become sort of one by osmosis, but my cousin was more the surety expert. I was kind of looking at it from the agency lens. And my agency never did a ton of bonds. We didn't do a lot of construction, which bonding heavily mirrors that. It gets into other industries, but primarily construction. So no, I wasn't either. I just knew that there was an agency issue with it when it would come in. For most agencies, they don't have a surety bond department. So I always say people kind of trip over it as it comes in. So the idea was just to make it as simple and seamless as possible, not only to transact bonds, but also to market them to customers and not let that business walk out the back door.
Yeah.
I always joke with people, like, every city in America, they have a few surety only agencies. And the only reason that exists is because the business doesn't stay within, the insurance agency they're typically with.
Well, I was going to ask if there's specialization in surety, if there's enough of it that you could do that as a distributor. And it sounds like there is, just to mop up the folks who take it in the mainline stuff.
Yeah. You'll see a lot of .coms that kind of go direct, and it's usually bond only. But I think that a lot of those agencies have smartened up over the years, and they're starting to cross sell, the commercial lines and the other accounts. So you wind up as an agent, if you don't, take surety seriously, you'll lose some accounts, but over a small bond potentially.
Yeah.
And that's really their pain point. I think a lot of people market and go after customers based on, let me quote your GL, let me quote your BOP, et cetera. But the bond is actually their biggest pain point, and getting that in place in a timely manner is a good way to kind of backdoor yourself into the broader account.
Yeah, and I always say if you aren't solving their needs, you're just inviting them to build a relationship with someone else who could solve the needs you're currently solving. Just asking them to move on. But I went down a whole path. But can you, for people who don't know, tell us about Propeller and what it is that you've built? I mean, you're up and running, but what are you trying to solve for?
Yeah, so we launched about 2.5 years ago, and the idea was to automate what I would deem transactional surety. Now that definition is muddied, but transactional in nature, quick turn, commercial bonds or small construction bonds, contract bonds that can be written either instantly or based on a quick credit check or what have you. As time has gone on, we have moved upstream. And so the technology automates all of the small stuff or the transactional stuff. And then it still automates pieces of the broader or the larger accounts, essentially. So on those, there still will be a human element in the middle of underwriting, but the submission and the billing will still be very much digitized and automated. And so we've moved upstream in that regard. But yeah, we built the system. We white label it for agents and brokers so that it can be customer facing as well as used internally. I would venture to guess the vast majority of bonds are still transacted from the agent now, just because, but we've made it, you can get a bond in 1 minute instead of 2 days.
Yeah.
And, even logging into a carrier system, I always joke with people, you can get a bond off your desk faster than even logging into one of them. And so we have about 20 carriers on our panel behind the platform on all different types of class codes of surety bonds. So, oil and gas, cannabis, construction, transportation, contract, et cetera. And it's really taken off. I mean, so it has been a lot of product-led growth where we've continued to master the product over the course of time. You know, we came out with an MVP, got about 20, 30 agencies on, kept it going, and now we have over 2,600 agencies on the platform.
Oh,
And
when was
so
that
they're all,
MVP?
oh, okay. I
How
would
long
call
ago?
it March, April of 2020, which is the
Okay.
weirdest time ever to try to launch a
Yeah.
new product. But it was funny because like, you know, from the carrier standpoint, some of the carriers have built systems, and we were very fortunate because we were building this for a digital solution, and we were only going to launch in like the 20 states that accepted electronic signatures and electronic notary and seals.
Yeah.
But then when COVID hit overnight, all 50 started accepting electronic
Yeah.
essentially. And we
Wow.
had the solution already. And I think the carriers will eventually slowly try to migrate to that, but they have to move like a cruise ship more than a speedboat. So you know, in some ways the market came to us. So it was hard to get a hold of agents and whatnot to demo the product during that time.
Yeah.
But a couple larger bonding agencies really had a need for it because they were sent home from the office and they didn't have enough printers and seals and all of this stuff at home. And so we had a digital solution kind of like waiting in the wings. So we got a couple large agencies on very early on, and that was
Yeah.
super helpful.
I can imagine in that moment as things were locking down was very scary, like trying to
Oh
start a
yeah,
business, but like,
yeah,
and in hindsight, I mean, who would have known how everything would have shaken out? Of course, it was still a terrible time for people,
yeah.
but it did create a real push, especially in the smaller end of the market. Um,
Hmm.
People needed to put food on the table, and they had to look for work somehow. Their existing job may have gone, and so suddenly you had a real demand for small business insurance, small
Hmm.
business services, smaller
Yeah.
contracts, people doing gig work. I mean, all these things that just lend themselves to needing a digital process. So it is kind of fortuitous.
Yeah, and you were serving people in different areas of the country, right? So like in Florida or Texas, construction's still booming, but the bonds may have been serviced in New York City where it's still shut down,
Yeah.
and you're having to try to, you know, figure that out along the way. So yeah, just a kind of a bizarre time, was definitely scary at the time, but you know, we just kind of kept hammering away and getting more traction and more traction, and eventually things kind of came, you know, to us.
So do you act as an MGA, as a wholesaler? What's your structural model?
Kind of one and the same. So yeah, so we have the pin up to within a certain box
Yeah.
and threshold, and then anything outside of that, we would have fully underwritten by the carrier of choice on the background, or sometimes it may go to multiple carriers.
Yeah.
So yeah, we operate like that. We, as a wholesaler, we early on we thought about trying our hands at being a SaaS model, but with surety, there's only maybe a couple hundred customers in America that would want a subscription bond service to pay.
Right.
So our idea was like, no, let's actually just give it away for free and build a highway and collect a toll on the way through. And that's what we do. So there's no premium minimums, and it allows us to appoint thousands of agencies, which that's become a really good selling point to the carriers we work with, right? Because a carrier, it costs them so much to appoint an agency for
Yeah.
given powers of attorney for bonds. So, you know, you have to do maybe a half a million in premium to get an appointment, and thousands of agencies don't do that.
Yeah.
And we can appoint all of those thousands of agencies, and even if they only write 10 grand in premium of the year, that's okay. We're aggregating a lot of this stuff, and to carriers, it's like gold. I mean, I think last year our aggregate loss ratio is 2.2%.
Wow.
So I mean, the carriers want this stuff. It's really a distribution play that's built on technology.
Yeah.
That's kind of the idea of it.
It is it is interesting how, we open talking about that agency need, all the
Mhm.
agents who can't really, because of expertise, because of access, because of systems, whatever else it is, or scale, can't get
Mhm.
can't get access to surety bond products. And for the carriers, they can't really solve for that because it is like, I wasn't thinking about the power of attorney. So it's enough to appoint someone as an agent or a broker to do either of those paths, and then have the premium be really low. So then add
Mhm.
in power of attorney and all the other complexities of probably working with older systems, more cumbersome. Um, you were sort of like, it feels like the industry was stuck, if not for someone, you, to come along and kind of plug that hole. So it's an interesting unlock for both sides of that equation, which frankly, you
Yeah.
don't usually see that it's like it works well for the carriers and it works well for the agents.
Yeah, we try to solve every problem in the value chain, because even for the principal, because you remember surety is like the three-party agreement, right? Where you have the agent, the customer, and the carrier. Or I'm sorry, the obligee, which is like typically the government entity that's requiring
Yeah.
it. So you have the principal, the government entity, and the carrier. And so it's for everyone, because like even the principal, they, there's never really been a world in the past where you could buy your surety bond on your cell phone and download it instantly. So we
Yeah.
have people that are on their way to job sites, or they're stopped from starting a job because they didn't get their bond in place in time and they have to quickly buy it, and they're able to do that. So that's been another neat use case. And then from the carrier standpoint, I would say the carriers that we work with that get on our platform love us. The ones that don't, maybe a little different feeling, right? But I think that we're very fair as far as like having a nice mix of carriers behind the platform. And then our biggest thing that we advocate for, I mean, we have to make a margin, of course, but the biggest thing is speed. So like what we try to look for when onboarding a new carrier, if a new carrier comes along and says, hey, I want all of your contractor license bonds, we would say, okay, but XYZ carrier is instant issuing up to this threshold. And then, a credit check gets us up to this, because we're trying to build the fastest highway to get there. We want agents to know that when they log on to their Propeller URL, they're going to get it as fast as possible. So
Yeah.
really the name of the game here is speed, because a lot of this stuff is a commodity, right? Like $100 bond is $100 bond
Yeah.
across the board. When you're talking all of these A-rated carriers, they're going to be good for the $5,000 potential claim.
Right.
And so it's really more, how do you get this done the fastest? How do you transact? So it's a total efficiency play
Yeah.
when we're selling to the agents. But again, we've now also crossed this threshold of having, some pretty complex programs for like oil and gas and some different things too. So we've differentiated our value proposition from just purely speed to also speed and some complexity. But yeah.
And technology wise, you're able to use what you built on the smallest kind of transactional volume
Mhm.
stuff. And I get it. It's not every component of that applies to a larger risk, but you're able to use effectively the same platform to
Yeah.
underpin
Yeah.
that. That's something for carriers who have, a small business, a middle market, and a large risk business. They really struggle with, like, typically it's the middle market folks who struggle, because the small business has to get something that's more efficient, transactional, automated, and the big stuff gets something that's more kind of risk management focused. And
Mhm.
middle market is a mix of the two, but it's usually then a bastardization of one or the other system, which doesn't fully fit. And it's interesting that you were able to, what you built was able to extend up market and had the flexibility to still meet those needs. I think that's actually pretty rare.
Yeah, I think the platform we built is very thoughtful. I have to give a lot of credit to Chris, my co-founder on that. He's also my cousin, so it's been a fun thing. But we, he kind of knew how to help move upstream a little more. So yeah, we can still take the submission. The application would be a little longer for
Yeah.
$1 million contract bond as opposed to a $5,000 license and permit bond. But and it'll get kicked up to underwriting. Credit check is already ran. We're requesting documents, and then when it's approved, we can go back into the system, release the link to make the payment, download the bond, all that kind of stuff. So there's that like human element in the middle, but
Yeah.
we've been able to digitize the like the submission and billing, which in surety, that's another thing. The billing is a nightmare. Typically these things are agency, even on the small bonds, they're
Yeah.
agency billed still. And so we do direct bill, credit card, debit card, ACH, auto renew, and like, you'd be shocked, but there's agents that are doing book rolls to us purely they want it off agency bill,
Yeah.
because they're
It's
losing
for
money
the
on it every
administrative.
year.
Yeah.
Yeah.
Yeah. Like I know you're still like 3 years in,
Mhm.
uh, but 3 years at a startup in a space that hasn't really been pushed yet. I'm sure you've gotten a lot of perspective very quickly. As you look forward, not just 3 years, but longer term, what do you see going on for the industry, given that I think your perspective is a little bit different from most of the folks that would have in here, because you're not, you're in a space that a lot of us aren't thinking about yet is
Mhm.
actually really critical to, allowing economies to work. Um, what do you see as you look forward for the insurance industry, or maybe for, for your niche?
Yeah, for our niche, I mean, I think that the train has left the station when it comes to electronic acceptance. So that's all happening. There's a couple obligees throughout the country that still want a wet signature and seal, and you have to overnight the bond, but it's really few and far between at this point. So I think we're going there, but then I know that there's a lot of people pushing to kind of put something on the blockchain as more of a, because right now when a obligee, let's say the city of Philadelphia, gets a bond, in order to verify that it's valid, they used to do it with the seal and the race, and that's no longer. So a lot of times they're calling the carrier, calling an 800 number, typing in the bond number to see that it's a valid bond and it's not, a counterfeit. And so I think there's some stuff around the verification piece that will be worked out, whether it's via blockchain or not, to where there's almost like a central depository where you can see all the active and valid bonds. That would be super helpful.
That makes a ton of sense.
Yeah.
So like marine certs are one area where blockchain is actually like people get it and I think we're still searching for uses. This is the other one that I've had in mind, is because it is like it's an archaic process. It happens super frequently and the current solutions aren't really fit for purpose with the scale of the issue.
Yeah. No, I agree. I mean, I think on the distribution side, I think more of what we're doing, but we're actually launching pretty soon our like embedded version of this, where right now it's just basically a subdomain where you the agent or your customer can buy bonds directly, but we're actually first it'll be like with a wireless iframe and then with an API to be able to meet the demands of customers at point of sale. So I always use the example, we're not talking with them, although that would be nice, but of working with an agent to like work with, say, a Home Depot, right? Yeah. And if you want to be an approved contractor to go do installs for Home Depot, you require a bond. And as they are signing up to be a registered contractor, bam, click buy your bond. So making it even more like meeting the customer as opposed to just simply on like Google AdWords or an agent's website, becoming that embedded version. I think embedded has plays in different areas and some I think are overstated, but I think surety is one where it makes really good sense to meet the customer at the point of sale. And then from the carrier side, I see a lot more push to transactional. I think everyone wants transactional surety. It's just a matter of how to go aggregate it. So we don't really have any true competitor that's doing it like we are yet. And we have a 2,600 agency head start. But that's where I see, a lot of, people want transactional surety for sure.
Yeah. It's an interesting one when you don't have any competitors yet, doing it like this or in the transactional side. Surety is generally a really strong performer. Well, it's sort of like feast and famine, but generally you're feasting to a great degree, yet the dollars are still pretty small relative to the scale of certainly PNC as a whole, but even, the biggest players are tens of billions. And so even if something is pretty sizable, hundreds of millions, it's still a fraction, teeny fraction of their top line. So I feel like as a space, surety has really struggled to get the right kind of investment, because it's always like, are we going to invest in this $80 million super profitable business or this $1.8 billion core of our existence? You're always going to lose out on the surety side. And so then we end up like generations and generations behind on tech, on experience, on meeting the agent's need. There's multiple parties in this, as you said. I can see that playing out on the VC side as well. Like that TAM story is never going to be all that exciting. Like you said, it was a SaaS play. Like that doesn't, the dollar, like you could make upwards of $73,000 a year. Like it's just not a big enough story for investment. So it does feel like it's been sort of trapped. And I think the way you solve for it is unique. I wonder if a carrier could have done that, because they would have always gotten into the priority calls that probably wouldn't make sense for the scale of most of the surety players.
I think the carrier, that's the one struggle that I think the one like kind of unintended consequence in this is that, because initially we thought we could handle with just one carrier or two carriers, but if one carrier tries to do it, they're also beholden to just their appetite. Yeah. And there's a much broader appetite need out there than you think. So, yes, everyone will do license and permit bonds and notary bonds, but then when cannabis comes up or oil and gas comes up or a private equity deal comes up where you don't know who's signing the indemnity agreement behind it, those kind of things, like you start to have to need some specialty markets and some different people to step in, where Main Street carrier just doesn't want to play in that. And why they don't have to, they do $1 billion a year with 4% loss ratio. Like they're not going to they don't need to take any chances on this stuff.
Yeah.
So that's where, we're also an appetite aggregator, and, small, tiny agency in California that gets a cannabis bond risk, they would have to go to the specialty carrier that would never appoint them. Or they can write one of these a year on our platform, get 30% commission, and not have to, keep the carrier fed or happy.
Yeah.
So that's where just the power of being like a wholesaler really comes into play.
Yeah.
So that helps a lot.
I think it is a really unique position in terms of who could solve the problem in surety. And I think you've done a really good job of slotting in there. And obviously, like, the proof is in the pudding with how it's gone. This is interesting to me. I'm remembering back to like reading that report in, God, it must have been like 2007 or something now. I'm sure things have changed a little bit, but it's been really cool. And I love seeing where, as a market or as an industry, we have these pockets where we're almost overfed profit-wise or overcapitalized, and that doesn't breed us saying, ooh, excellent opportunity to do something really cool. It tends to lead to complacency and mediocrity. I'm a car guy, and so I always think of when Chrysler made all this money off minivans. They could have used it to like improve quality and anything. They went and bought Lamborghini. Which worked out so well. Like, really cool, but not exactly the best strategic investment for the future. Like, that's kind of, carriers aren't going around buying exotic car makers, but generally I feel like when we have these pockets, we don't take the right opportunity out of it. So, kudos to you and the team for seeing that space and doing something with it.
Yeah, I think someone told us one time, I'm kind of blanking on who it was, but it took, because I was not a surety guy, I was an agent that had done surety before, but that it kind of took someone from outside of the industry to figure it out, because everyone kind of has their own. I mean, and again, when you're kicking off so much underwriting profit every year, it's like, why innovate? Just keep the train on the tracks. I'm retiring in 5 years. I don't take any chances. I mean, underwriters and surety are very well paid because it's a very profitable business. So that's been tough for us, even from a hiring standpoint. It's like, okay, people that know surety are expensive. And so that's that was just part of it, I think, is that we kind of solved the problem from the outside, which was really, really helpful.
The outside, but still being insurance people who I like that. Like, I think you didn't come in being like, oh, these idiots, they don't know what they're doing. You had a respect for actually what's being done and why, and tried to
No, I brought my cousin in because he knew what he was doing. So but from just the distribution strategy and the play, I just knew I just knew how much of a pain it was to the everyday agency. And so we serve kind of two different ways. Like, to Main Street agencies, where I call it bolt-on surety bond department. Like, when they sign up with us, they get tech, they get markets, they get people that know surety, and they kick out everything to us. We pay 30% across the board, and they're good. To the large national brokers, which we work with most of them now, they look at us more as their transactional unit. So anything below X amount of premium, they lose money even looking at it. So they kick that off. So we kind of have found a way to like play nicely in a bunch of different arenas, which has been really cool.
No, that's really smart. Aaron, thank you for spending some time and turning everyone into at least more of surety experts than they may have been before. Maybe there's some interest in the space because it deserves it. It's a strong performer, and it's necessary for just every building you see. Lots of the contractors out there, it's people, like, it's a common thing. We just don't even think about it. But thank you so much for joining me.
Yeah, no sweat. Thanks for having me, Bryan.
Thank you to Aaron for spending some time and teaching everyone about surety and the opportunity in it. I think it's such an interesting space because of how much people don't know about it, and they're not thinking about it, how much we take it for granted, and all the things going on around us. Those tradespeople driving by in their worker vans or trucks, the construction project going on, whatever it is, there's surety behind so many of these things. And yet, it's kind of invisible. It's interesting, especially when you start thinking about the economics of it. And, we talked about this a little bit. You mentioned $1 billion surety writer who's got a 4% loss ratio. Like that's actually a very real result. And, they shared at Propeller just over 2% in their book. So it's really profitable, but it's small stuff, it's transactional, and it's typically a small piece of a very large carrier's portfolio. So it doesn't really get the attention it should from an investment standpoint. And so I love seeing solutions come along that help push everyone forward and maybe bridge some of that innovation gap that exists in a pocket. So kudos to the team at Propeller. It was interesting for all of you. And, thinking about what are some of these niches or areas where maybe we haven't been spending the time, or maybe it could be a good opportunity to invest a little energy in because it's sort of a contained, almost like pilot environment to try something and to see if we can push the needle. I think there's opportunities like that around us all. And we should think about, is there a place that almost like a lab, I could test this out and see what could happen, see how we could grow something, see how we could change the way we operate. And we might discover something that's even more extensible, just like Propeller saw. They weren't building for larger risk, but what they built, they realized could serve larger risks and there was demand for it. So they created something and saw potential and opportunity that, wasn't even necessarily in their eyes when they first started out. Very cool story. As with anything, take the lessons in, share them with those around you, spread the love, spread the word about the podcast. And, you could help inspire someone else to help push the industry forward as you're trying to do as well. So just send them to future-of-insurance.com and they can subscribe and find other episodes and books and all that good stuff anytime. All right. Thank you all for listening in. And thank you again to Aaron and the team at Propeller. And I will see you back next time.